What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we are continuing to see that sector rotation and that volatility. Remember that we have the FOMC meeting tomorrow and we do have quad witching on Friday. So continue to expect to see sector rotation and volatility to finish out the week. So first up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did go down 0.18% and we did see the price action closing back above a positive sloping 5 EMA. So we still do have bullish price action and a bullish trend. Now I do want to talk about one thing with the cycle analysis is we were expecting to see a weak spot in the market in the middle of June, and we are going into FOMC and quad witching this week. Now one thing to take note of, if we do look at the ETF of SPY, we can see the SPY top 10 sectors are broken down by percentage here, and we can see that the tech sector is 33% of SPY, and the financial sector is 13.7%, healthcare is 12.6%, and the industrials are 9.5%. So by far the heaviest sector weight is technology, and we also can see significant weight in financials, healthcare, and industrials as well. So jumping over to the sector analysis, we can see that the tech sector is actually doing very well going into the cycle analysis of the middle of June. But remember, the tech sector did have that correction, and we did see the tech sector bottoming out on May 12th. So the tech sector is coming out of a correction and it's doing very well, and that is helping keep the S&P 500 continuing to go higher and preventing it from going much lower. We see a lot of strength in tech, and remember that tech is over 30% of SPY. Now switching over to the financial sector, we can definitely see a lot of weakness going into the middle of June, and coming down from the all-time high, the financial sector is down about 3.5%. So keep in mind, it's not just one sector that drives the stock market, and we are starting to see some weakness in some of these other sectors. And that's why I'm saying there is sector rotation going on right now. Now jumping over to the industrials, we can also see a lot of weakness going into the middle of June. So we are seeing that weakness going into that weak spot of the cycle. If we come down from the recent high to where we are today, we're down about 2.6%. So we are seeing some of the sectors seeing weakness going into the middle of June, but we're also seeing the other sectors carrying a lot of strength, which is helping SPY basically continue to go higher. We can also see on the healthcare sector that we're also seeing strength going into the middle of June. So the healthcare sector and the tech sector are definitely seeing a lot of strength, and that could be a positive sign that we're seeing sector rotation, and we're seeing selling in financials and industrials, and we are seeing money flowing into some of the other sectors. Here on the energy sector, we can see we were up 1.9% today and on increasing volume, and we aren't seeing that weakness going into the middle of June. So understand that sector rotation is very common with quad witching coming up this Friday, and we are seeing a lot of the strength go to some of these sectors that is helping SPY continue to go higher, even though we are seeing weakness in the financials and the industrials. So jumping back over to SPY, we can see that SPY did fail to break and close back over 425 for the second day in a row. That normally is a concern that we have to be aware of, because remember, all of these price targets are critical, and every single one of these price targets can lead to a stock market correction. So right now we want to see SPY getting back above 425, and I did add a new price target for you to pay attention to, which is now at SPY 427. Remember, we need SPY to get back over 425 before we worry about 427. And if we do get above 427, we're looking for SPY 430. Now to the downside, we do have critical support at 423, and the 20 simple moving average continues to head higher, which is right around 420. So your critical support levels are 423 and 420, and the market will start looking like it's rolling over and going into a correction if we see SPY going below 420. So 423 is your early warning support level, and 420 is your most critical support level. But do remember that SPY is still in a full bull trend, and the price action is still looking very bullish. So there's no reason to be bearish until we see something break down in one of the critical support levels, which we just have not yet seen that. Jumping over to the NASDAQ 100 triple Qs, we did see the NASDAQ going down 0.65% today and closing right on top of that previous resistance level right around 342. That is actually a bullish sign when you break a resistance just yesterday and then backtest that resistance as support. So even though the triple Qs did see selling today, it's not necessarily a bad thing to see the triple Qs cooling off after a monster day like yesterday, getting ready for that next leg higher. So watch for support at 342 and look for the triple Qs to make an attempt at the next resistance level right at 346. If 342 does start to break down, the next support level is at 339 and then 336.9. The 20 simple moving average is now sitting right around 334, and that is still the most critical support level, and we will know an early warning sign would be a close below 339. So just like with SPY, the triple Qs are still in a full bull trend, and the price action is still closing above a positive sloping 5 EMA. So overall, the price action and the trend are still very bullish, So there's still no reason to be a bear in the triple Qs. On the Dow Jones, we dropped about 0.25% today, and the Dow Jones did close below the 20 simple moving average. Remember, the Dow Jones is looking the weakest of all, and you can definitely see that cycle analysis is predicting a weak spot in the Dow Jones as we see the Dow continuing to head lower into the middle of June. So this proves the point I'm trying to make with the sector rotation. We're seeing a lot of money leaving the Dow Jones stocks, and it is going into the healthcare, tech sector, and the energy sector. So this is very common sector rotation, and it's nothing to be concerned about. And it doesn't mean the Dow Jones is going into a bear market. It's just a temporary volatility while we do see sector rotation. So on the Dow Jones, look for support at 341.7, the 50 EMA at 340, and then we do have support below that at 336.7. Remember, if we start closing below the 50 EMA, it is likely we could come down and close this gap at 331.7, so don't forget about that gap down there. But overall, the Dow Jones is starting to look like it's rolling over, and it will have resistance now at 344. And if we can get back above the 20 simple moving average, we still have resistance at 348. On the Russell 2000, we dropped about 0.29% today and closed right on top of that support level at 230. Intraday, we did find support off the 13 EMA, and we can still see the Russell 2000 has the full bull trend. So overall, the Russell 2000 is just consolidating after getting to that price target at 233. So we still have resistance at 233, and if we break over 233, our next price target is 237. To the downside, you're looking for support at 230, the resistance trendline breakout right around 227.5, and the 20 simple moving average at 226. If we break below the 20 simple, don't forget about the gap below at 223.7. On ARKK, we dropped 2.74% today just after ARKK was starting to look like it wanted to go back into a bull market. The good news is the price action did stay above the 50 EMA, which is a positive indication that that is acting as support. So right now you want to set your risk on ARKK below 114 and the 20 simple moving average below about 111. If ARKK starts breaking back below the 20 simple moving average, this could have been just a false breakout in the bear market and we could be going much lower. But overall, ARKK is starting to look like it is building up bullish, and we need to get all of these moving averages crossing back above the 50 EMA. So we still have resistance above at 120, and we will have this resistance trend line, which is right around 121.3. If we can break above those levels, we could be going back up to 127, but don't look ahead. We need to break current resistance before we look towards the next price target. Also remember that the ARKK is considered growth stocks, and this could be one of the sectors that we do see money rotating into going into the middle of summer. On the VIX, we were up today 3.72%, and the VIX did close above 17. Overall, this is completely normal volatility, especially with quad witching and FOMC, and we don't see anything too concerning just yet. We are back above that resistance level at 16.6, but we're still below the 18.2 resistance. Remember, we need to see the VIX getting back into the 20s to worry about a deeper stock market correction. Anything between about 15 and 19 is completely normal volatility, and just continue to pay attention to the price action on the indices. On gold, we continue to head lower, and it does look like we're going to come back down to retest support at the 50 EMA. That support level is 1843, and if that level does break down, we also do have support at 1829. We've now lost the full bull trend, and we have resistance just above at 1876 and the 20 simple moving average at 1888. On silver, we're also breaking down below the 20 simple moving average, but we are finding support at 27.6. If that support level fails, look for support at the 50 EMA at 27.1. Upside resistance on silver is now 27.8 and the resistance trend line at 28.3. On Bitcoin, we're currently down a little over 1%, and Bitcoin did close over that critical resistance yesterday at 39,000. We now need to get back above the 50 EMA and break above the resistance above at 43,000. So your critical resistance is 43,000 and your critical support is 39,000, and we need to see Bitcoin getting back over the 50 EMA before we get overly bullish. Right now, Bitcoin is just bouncing off of a nice support level, and it could still be a dead cat bounce until we get back over the 50 EMA. So set your risk levels below 39,000 and the 20 simple moving average at 37,000, and do know that if we do start breaking over 43,000, we will be looking much more bullish on Bitcoin. On Amazon stock, we are relatively flat today, but we see Amazon continuing to trade outside the upper Bollinger Band. Overall, this is a very bullish development, and it does show that the price action wants to continue to go higher. So look for these Bollinger Bands to continue to expand, and we are still waiting for that 20 simple moving average to cross back above the 50 EMA, and then Amazon will be in a full bull trend. Our price targets above are 3,400 and 3,458, and we do have downside support right here at the breakout level at 33.35 and the 50 EMA, and also the 20 simple moving average right around 32.64. So overall, Amazon is looking very bullish, and it did break out and it wants to continue to go higher. If we see Amazon breaking above 3,400, that will be a very bullish price action development. On Tesla, we dropped about 3% today, and Tesla did close back below that 20 simple moving average. The critical support level on Tesla is 594, and if we break below that support level, we could be coming back down to 546. Upside resistance, we need to break back above about 602, and we still need to break that very strong resistance level at 626. If we break above 626, look for resistance at the 50 EMA, which is now at 635. On Apple, we dropped 0.64% today, but Apple did have that very bullish day yesterday, and it did close way outside the upper Bollinger Band. So this is nothing to be too concerned about, and Apple really was just cooling off today, and it still could make another attempt at our resistance level as soon as tomorrow at 131. If Apple breaks above 131, look for next resistance at 135. Critical downside support is 128 and the 50 EMA at 127, and if we break below the 50 EMA, you're looking for your critical support level at 126 to hold up. Remember that Apple does not have a full bull trend just yet, but it does have 3 price action closes in a row over the 50 EMA, which is bullish price action. On the financial sector, we were up 0.19% today, but it still looks like the financial sector is rolling over and wants to come back down and retest support at the 50 EMA. On the industrial sector, we were up 0.43% today, but the industrial sector also looks like it's rolling over and needs to come back down to the 50 EMA to test it as support. On the healthcare sector, we were up 0.03% today, and the healthcare sector continues to close above a positive sloping 5 EMA and still has a full bull trend. The energy sector was up 1.9% today, and it's still closing over a positive sloping 5 EMA, and it still has a very strong bull trend. So going back over to the S&P 500, we can definitely continue to see sector rotation. We're seeing weakness in financials and industrials, and we're seeing a lot of strength in the tech sector, the energy sector, and the healthcare sector. So this could just be a huge sector rotation getting ready for the next quarter, but remember we still have to get through the FOMC meeting and we still have to get through quad witching. So continue to watch the critical support levels, because as long as we're not getting price action below critical support, we still want to be a bull in this bull market. We can still go much higher, but we need to be cautious up here, and we need to understand that the higher we go, the more risk there is. So this is not the time to be reckless or taking on too much risk, but it's also not the time to be doing absolutely nothing and just sitting on the sidelines, because overall this is a bull market and we don't see anything that should stop us from being a bull in a bull market. Also remember, on the Stocks Channel Discord, I'm doing intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm also bringing new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link in the description below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.